Hello everyone, this is Jem from Data Finance. Welcome back to our channel. We are with you on US inflation data release day. All right, on today we have received just 30 minutes ago, 1 hour ago, we have received the data of US inflation. So what's happening? It's just released as 7.5, and that is the highest level of 40 years. It's really high level. So just before CPI data, everybody was expecting that only 30% of the analysts, global analysts, have expressed their view of 0.50% rate hike, because they have priced already like a 0.25% rate interest rate Fed interest rate hike. So now they are talking about 0.25% not help cannot help to pressurize the demand in products. So a tightening should start with 0.50 base points. So this idea is just becoming the mainstream idea. When it happens, so there will be monetary tightening, and people will just divert their savings to these kind of instruments like with interest income, because it's almost risk-free, because US, and yeah, compared to stocks, less return, but still 100% return. That's why they are just choosing this side. All right, after that $1 index started to rise, and we see that gold and indexes, oil as well, is pressurized. All right, let's go ahead with our first chart. As you can see here, our first chart is NASDAQ. On here, on our NASDAQ chart, it was trading just above 15K level. It was enjoying itself, but it couldn't stay there with these high inflation rate. I will just show you something, a similar decline. All right, you see on the 2nd of February, it just tested here, and then the correction started like that. Similar decline, even the first hour and second hour, first hour, second hour, as you can see here. So we may see something like this, then a trial on this level again to just make another trial, then a rejection can just come, and we may test these low levels again. So markets generally just follows its previous actions. We may see the similar one, not from directly here, but levels and the patterns seems similar. So on long term, as long as under this level, we will see another decline. At least 14K 500 is possible right now. So just be careful on trading, on sell and buy positions. Just make the prices just stable, then you can just start trading on that one. But if you had the chance of selling on this one, I just congratulate you, because we made some money with this one. All right, let's look at DAX index. What's happening there?
You are ready to win with us. GAN Markets.
All right, the expectation of that one, the sell-off has happened in DAX index with NASDAQ. They just followed on these, right? They followed NASDAQ, and then on the fall they have followed NASDAQ as well. But they didn't make this like a further decline. Reason: NASDAQ is just US market, and Fed officials, Central Bank of US, is just raising the rates. But in Europe, no sign of that one. Even Lagarde was hawkish on her interest rate decision date. They didn't raise the interest, but she was hawkish, and then she said a high inflation to be curbed with all possible solutions. And then even she said, if needed, we can raise the rights. And there's no timeline for that one, but she said like that. Then a few days later, the market just declined so fast. A few days later, she just like softened her voice of tone. That is just the reason not further decline happening on here. That's why we see from this level some kind of like getting back to that level, but still it is testing the resistance level and it cannot break that one. That's why we cannot definitely say that, all right, DAX won't be affected with the sell-off. It's contagious. Rallies and sell-offs are contagious. So we may see the sell-off. If sell-off in NASDAQ goes on, we may say that sell-off will just come to German market as well. That's for the DAX. So just check these both currencies. They both act together. All right, let's look at our last chart. That's SP 500. All right, we are on S&P chart. As you can see here, it's more like it seems that in NASDAQ, it just declined under support level. But in S&P, as you can see right now, it's just struggling to break the support line. On coming hours, it may just go further, but right now, as you can see here, it's not passing, it's not going down further. That support line is keeping the index. That's important. So reason is mainly earnings, because today's earnings was not bad, and still S&P is more broad index. Because in NASDAQ, why we see sharp declines? Because the valuation in NASDAQ has been tremendously high during COVID. It started that one in the March 2020. It started around like a 10,000, like it's kind of 12,000, something like that. Then it just rising like that. So it has risen so fast right now. It's just giving some of earnings. So S&P, it's not that rising. So price compared to that one is more acceptable. That's why we see these kind of movements not so sharp, but still it's struggling to stay above this line. Just watch that. If it just goes under that one, it may get faster and it may try these levels. All right, thank you so much for watching us. We will together on more news and we will cover more charts together and we will report all recent news with you. Bye. Have a nice day.